Hey, what is going on, Bulls and Bears? Back with another dose of economic reality. It is Friday. Interesting day. Bloodbath on Wall Street. Now, the interesting part is the business news networks are saying the sell-off is because of the fears of inflation. So there's just now a fear of inflation. It's been going on for a long time. Everyone on this channel knew way back over 2 years ago that inflation was going to be a problem. And we just recently had all these bank executives, CEOs testifying to Congress about many things in the monetary system and the banking system, including inflation. But here's the thing. It is the banking that is the big cause of the inflation. It's all the loans, it's all the debt, and it's not necessarily the CEO's fault. It's the entire way that the banking system is set up, the entire structure of loaning out money. Ever since 1971, we've been able to create endless amounts of currency out of thin air, and it's no coincidence that ever since then, the early 70s, we've seen a massive uptick in the cost of living. It used to be that just one person could work back in the old days, let's call it the old days, right? The 50s, the 60s. One household, one person working, usually the man, and that took care of the home. You could pay off your home. Debt wasn't such a problem because everything was cheaper. Home prices were cheaper. The cost of living was cheaper. We came off the gold standard. That created a debt monster that caused the cost of living to massively rise. And fast forward to today, most people are struggling with debt, buried under debt. Most households, just to get by and stay out of debt, have to have two incomes. And not only that, sometimes it's even more. Sometimes it's both people working in a relationship, for example, and side hustles in addition to the regular jobs, just to try to keep up, just to try to keep your head above water and stay out of debt. And in my opinion, that makes people want to go waste even more money because they're so stressed out, they're so deep in debt that they don't have much hope. So now they rely on purchases and shopping and vacations and trips to make themselves feel happy. And if we look at the dollar purchasing power, we see it's lost over 95% of its value in the past several decades. If you go back to when the dollar was first taken off the gold standard, you see a massive decline in the purchasing power of the US dollar. Of course, the dollar is the world's reserve currency, so the US has basically been able to abuse the creation of new dollars. And that's why, even though we see all this money printing, this debt creation, trillion-dollar bailouts, multi-trillion-dollar spending packages, deficits, you name it, we still have the world's reserve currency. And with the recent rise in interest rates, the dollar actually has been strengthening. And people say, why is that happening if they're creating so much out of thin air? Why is it happening? Because you're comparing the dollar to other fiat currencies that are also created out of thin air around the world, around the globe. Now, there has been some reintroduction of precious metals and gold back into some of the monetary transactions around the globe. I think ultimately that's going to be what we're going to go back to after the collapse. But it's my opinion that we're going to see a lot of pain, a lot of people getting wiped out financially, massive rising costs in some areas, maybe some deflation, maybe even some crashes in other areas. We're keeping an eye on the housing market. But let's take a look at some other recent news today. All right, this one comes out of Fortune. Billionaire investor Carl Icahn warns the worst is yet to come for investors and compares U.S. inflation to the fall of the Roman Empire. Folks, the expert has spoken. Carl Icahn, the billionaire investor. This is the fall of the U.S. empire. Sounds like what he's saying. U.S. inflation, comparing it to the fall of the Roman Empire. The empire has fallen. Inflation that we've been warning you about for years is going to take down the U.S. empire. Or will deflation come to the rescue? Will everything get cheaper? Please let me know what you think down in the comments. I think we're going to see inflation in many categories, including food, energy, some deflation in other categories, housing market. Now, something very interesting. I was watching one of the business networks today. It was either CNBC or Fox Business. I can't remember which one. But they were talking about, stocks to buy the dip. So if inflation's causing the sell-off, and if the fear of future rate hikes and higher interest rates is causing the sell-off, why would you want to buy the dip? Why would there be a dip when we're not talking about stopping the rate hikes And inflation, is that going to go away? Why are we talking about buying the dip? Anyways, that's what they were saying on the news. I thought it was pretty crazy that they were even going there, but that's their job. I seriously doubt that anyone watching this channel is buying the dip, as they're calling it on the business news. In fact, on this channel, we reported the top back in January. We showed you the chart pattern with the lower highs. All right, but please let me know what you think down in comments. Do you agree with Carl Icahn? Is this the fall of the U.S. empire, or is inflation equivalent to the fall of the Roman Empire? What do you think about that? Next, let's talk about what another billionaire said. Ray Dalio, you fight inflation with economic pain. And he's talking about investments here. He's talking about how the market's going to be negative, markets are going to drop. But also, if you're holding cash, you're going to be losing money as well because of inflation. So holding cash, your dollar's getting devalued because prices are still rising. If you invest in the markets, you're likely going to lose money. So it's a no-win situation. That's what he means by economic pain. Markets going down, cost of living rising, stagflation, and things are about ready to get a lot tougher in the housing market. Mortgage rates are going to go even higher. Take a look at the 10-year bond yield today. Now, it actually ended up down compared to where it closed at the end of the day on Thursday. But if we look at intraday, this thing spiked as high as 3.76. That is massive. And now we're looking at a chart of mortgage rates. Folks, these are the highest mortgage rates that we've seen in about 15 years. Combine that with home prices that are in a mega bubble, and we're going to see a very interesting housing market. Could be a bloodbath. It could even turn into a crash. I don't think they're going to let it crash. Many people are surprised that it hasn't crashed already when it comes to the prices because of the surge in mortgage rates. But remember, there's a lot of other things happening behind the scenes to help keep the housing market propped up. And I wouldn't be surprised to see a 40-year, a 50-year mortgage come out. I wouldn't be surprised to see more rescues where they cancel foreclosures. Would any of you be surprised? I doubt it. I don't think anyone would be surprised at this point. I hope that doesn't happen. I hope it does crash. But I think they're going to try to prevent this. They're going to try to keep this bubble inflated. But it's very interesting that we're seeing they are letting mortgage rates rise. Right? This is not something that's just happening by accident. They have full control over these rates via the bond market. They could keep mortgage rates suppressed by buying bonds. But what is the Fed doing? They're actually shedding assets from their balance sheet. Instead of buying everything under the sun, they're reducing the balance sheet very, very gradually. This is a controlled collapse of the economy. That's why I say there's not going to be a crash, but a controlled collapse, a continuous price decline in the housing market, in the stock market, lower lows, lower highs. Continue to prepare for pain. Compare your wallets for rising inflation in other areas, food, energy, and lots of other things. Automobiles coming down a little bit in prices, but we talked about that a few reports ago, how we're likely going to continue to see elevated auto prices. I don't see any price crashes in autos. And again, I hope I'm wrong, but please let me know what you think down in comments. Disagree, agree, add to the conversation, add to what we talked about here. What are you doing to prepare? I'm continuing to stack silver. That is my main thing that I'm continuing to stack. Prices are excellent right now, under $20. The digital price, of course, physical, you're lucky to find it for under $24 an ounce. Keep stacking, folks. That's it for today's report. Hope everyone's well. We'll likely see you on the weekend. We'll give you a weekend update here. Please come back. Make sure you subscribe. Make sure you hit that notification bell. Come back for more. Keep stacking. Bye for now. Peace.